Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Thursday, the 10th of April. I'm Daniel Lam, your host for the podcast. Well, I want to start by giving you a light-hearted snippet. I carry a $5 coin with me to chess tournaments. And when I could not decide which opening to play in the game, I would flip the coin to decide what to play. This must be what many of you would be feeling about the constant flip-flopping from Trump over the last 6 trading sessions. But it is not as random as you may think. So if you look at his key priorities, Trump is well aware of the issues of the US budget deficit. So case in point, back in 2016, at the start of Trump 1.0, the federal deficit was 3% of GDP. Fast forward to his re-election, it was already at 6.6%. Gross federal debt has gone from 105% of GDP to 124%. So he is well aware that if he manages to control or even lower the US budget deficit, it would give investors more confidence on US assets and cement the US dollar status as the global reserve currency. Therefore, he must have felt that his policies were working in the first few sessions since the Liberation Day announcements, when the US 10-year Treasury yield dropped from 4.2% to 3.8% over a few sessions. The lower the yield, the cheaper the borrowing cost for the United States. And of course, many of Trump's policies, such as Dodge, are designed to shrink this budget deficit. Therefore, the subsequent sharp rise in US 10-year yield from 3.86 to 4.52 in only 3 trading sessions must have touched his nerves. This could well be a reason why we are seeing this flip-flop in his policies. So, how should investors be taking the latest development? Well, we would add to our preferred equity sectors across regions on pullbacks. The focus areas would be US technology software, European industrial, and financials. Now, we understand that at this moment, the focus of the trade war has zoomed into China. But as we discussed in our podcast yesterday, it is likely that some agreement will be reached between US and China. Thus, we remain comfortable adding on pullbacks, on Chinese high-dividend SOEs, and Hang Seng technology sectors. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.